Hi everyone. No major news today, so let's get straight into the data. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Fear and Greed Index got a slight pop here to 21 from 19. Nothing crazy, still in extreme fear. Pretty much across the board, you can see market momentum, extreme fear. Slight bounce up to that 125 EMA, probably going to reject off there, and then we'll see what happens. Maybe a move like this, back from September into that October time period from 2023, where you tested it, rejected from there, and then got a lower low. That would be interesting. Strength did finally turn down a little bit. That's been hovering. Breadth still in fear. That's been rolling down more. And then put call ratio continues to climb. Market volatility did pull back a little bit here today. We'll look at that later on the charts. And then looking at bonds, you can see slight tick up, a little bit of a reprieve after the big dip in yields that we saw yesterday. Moving over to the earnings calendar, you can see Amgen missing on the bottom, beating on the top. Caterpillar beating on the bottom, missing on the top. Marathon Petroleum beating on both. And then Supermicro missing big on the bottom line, but meeting on the top. They are doing poorly after hours on their earnings. And then for tomorrow, Disney, CVS, that'll be interesting. They did very poorly last time. Occidental Petroleum is in there. Marathon Oil, continuing to watch those. And then Monster Beverage, always fun to watch after hours tomorrow. Then if you hold anything into the close tomorrow, you do have Eli Lilly in the morning. Shouldn't move too much, but it is a huge company. Moving over to the economic calendar, you can see just how low that 3-year note auction came in at 3.8 versus nearly 4.4 on the previous. Then for Wednesday, 10-year note auction, that'll be interesting. 4.27 was the previous. I think that's going to come in much lower, closer to that 4, if not a little bit lower than that. And then looking at Thursday, initial jobless claims, that is going to be super critical. If this continues to step up, that's going to be very bad for markets. And then 30-year bond auction on Thursday as well, plus Fed balance sheet, continuing to watch that roll off. Moving over to the charts, starting off with the S&Ps here on the hourly and the daily, you can see we were in this channel, kind of established that mid-session yesterday to after hours, and then we touched that trend and then immediately gave it back all into the after hours here. Seems like we're going to get down to this 517 level before the open, so we're going to give back all of the gains from after hours yesterday, pre-market this morning, get back to that level, momentum rolling to bearish here, and if that breaks, then we're probably headed to this previous low right around that 509 area. And this is all after touching that 55 EMA. So short term, definitely bearish. Medium term, still bearish, but definitely extended. You can see the Monday session, we got to 30.71. That's very low for the SPY, especially recently. Tried to rally here today after the slight recovery on Monday. And now it seems like we're going to get a bigger breakdown, potentially testing these previous lows once again. And then looking at those tasty charts, you can see the big move down here. This is the 4-hour, recovered to that 21 EMA, gave it all back here in today's session, momentum resuming that bearish trend. And then lowest ATR band is 512.49. So that's just barely below these closing candles that we saw yesterday and would overthrow it just barely here, pretty much to the low of that 11 p.m. candle. So we'll see how that plays. Probably headed back to that region. Still very much a medium-term downtrend. Still haven't seen those ATR stops roll down, but I would guess that's going to resume tomorrow. Moving over to the NASDAQ, you can see very similar thesis. Tried to rally, hit some trend lines, hit the 55 EMA, gave it all back. After hours, fell right to yesterday's close. Now it's getting a slight bounce, which is interesting. I doubt that that's going to hold up. On the daily chart, you can see that same structure continuing to downtrend here. Did hit the trend line. That would be your support if this structure in here starts to break, when that trend line is sitting all the way down at 425. So super important zone, 433.24. If that zone breaks, then we're probably headed to these previous lows from the pre-market on Monday. Moving over to the Russell and the Dow here, you can see the Russell up about 1%. After hours, giving a little bit of that back, about 70 cents or so. Momentum still bearish here. 200 SMA would be your support at 197.40 if it did break this zone right here at 201.88, and that trend line do have an intermediate support, but really the 200 is going to be your support there. And then the Dow, very similar. All of the major indices are really doing the same kind of thing. Big move down, doji, slight rally. And you can see we're all closing well below the halfway point on those candles, falling after hours. So still looks bearish, just a short-term bounce here today. Moving over to the Mag 7, you can see that same price action. Big gap down, big rally, slight continuation, hit the trend, rejected from there, falling after hours. Almost down to that close from yesterday, and right on top of that 144 EMA at 244.87. You can see after hours 244.57, so technically slightly below it. Highly traded zone there at 239.74. Probably going to see a move here, at least to that level, if not down to the 200, sitting at 233.95. Moving over to Apple and Microsoft. Inside candle here for Apple, so not as strong, still down 1%. Right at the level 207.14 was the resistance. Closed just barely above it, but after hours down about 1%. Not great at all, probably falling back down to that trend around 250. And then you can see Microsoft more in line with the rest of everything. Gap higher, wicked the 200, falling from there, falling after hours. 349.22 is the level. If that zone breaks, then you're watching for 378.77. We talked about it before. Let's go ahead and add that level right at that wick low here from 25 April. Touched that yesterday. Probably going to fall back to that zone. Still huge volume, still bearish momentum. Moving over to Meta and Amazon. Look at Meta turning in a really solid day. 3.86. This seems like the Mag 7 stock to pick if you wanted to be in one right now. Very strong candle. Closed above the level. Touched the highly traded zone. Momentum bullish, RSI bullish. It is down a little bit after hours, but not nearly as bad as some of these other stocks. It'll probably sell with everything else, but it'll probably do better compared to what we've been seeing. And you can see Amazon here up 0.5%, gave almost all of that back after hours. Critical zone there at 159.89. If that breaks, we're probably headed back to the 153.50 area. Moving over to staples and discretionaries, both of these managed a positive day. Staples still hanging in there. I guess it's really doing what it's supposed to do, which is not move very much, not have the same volatility. Overall, still a bullish trend. Still think we're going to touch that 70-90 level at some point. Momentum bearish here. RSI kind of neutral. It's above the 50 line, but below the SMA. And then looking at discretionaries, it was up 1.1%. Gapped higher, rallied, touched the level, rejected off of 174.76. And then you can see here, again, falling after hours, about $1, looking for that 170.68 level. And then if that breaks, we're probably headed back to that low from yesterday. Moving over to Breadth, we actually did see a slight bounce here, did close above the 36.60 level. I just can't imagine that's going to hold. I think this is more of a dead cat bounce, slight bounce here, slight rejection from that previous low. I think we're headed lower here. Once we get into the 16 area, then you could probably say this is probably, you could probably say as a contrarian metric, it might be a good time to be buying or at least looking at buying. Usually once this gets into those super low levels, it doesn't stay there for very long. And then looking at 50-day, similarly, tested the level, rejected from there, closing still in this range. Probably going to roll down to the 40 level before we see anything else. Moving over to the dollar here. Remember, we are seeing the dollar move more correlated here with equities versus inverse. Again, that is because markets are concerned about that recessionary environment. If the recession comes, stocks and the dollar will go down together. And it does seem like that is going to continue. This trend here needs to break pretty much right there at the 55 EMA on the hourly, which is at 102.89. Critical zone right there, momentum bearish, RSI bearish. And again, pretty much looks like everything else. Big down candle yesterday, slight retracement here today, rejected from there, probably going to get the continuation into the after hours and pre-market tomorrow. Moving over to yields, these caught a slight bounce here today, and they are continuing a little bit of a bounce into tomorrow. Interesting to see that. And again, look how freaking close these are together. So you got the 2-year at 3.99, 10-year at 3.9, just inches away from a steepening yield curve in a normalized condition. Strong candle today from that 10-year. We'll see where it settles after the 10-year note auction, but my guess is that's probably headed to the 4% area, maybe even as high as 4.1. That seems a little extended, but it's possible. 2-year, on the other hand, I think is going to continue to stay below this 4 range, especially once we get that first cut in September. Moving over to bonds here, J&K gapped. It's right in the same zone though. Really hasn't moved for a couple of days. You can see the gap down, gap up, doji, same zone it's been in for the last several months. And then you can see TLT did fall, so you did get an island reversal. Still think this is going to hold the higher low here. Let's extend out that trend line there. So trend support sitting down around 95.30. 10-year might go a little bit higher, but not too much higher in my opinion. Moving over to volatility, move index gave a little bit back, nothing crazy. I think this is still pushing up to that 131 area. And then similarly here with the VIX, down 28%, wicked around that 24 area. And then you can see it did rally back up a little bit at the end of the session as we started to see that fall. I I think this is going to push one more time. In terms of levels, you can see 33.86 is critical. That takes us back here to the lows from October of 22. That was a critical low. Let's go ahead and add another level here, right at those wick highs from March of 22. That's in the 37 area. Could touch that one more time, right in the zone. These are very extended levels for sure, but it does seem like we're going to get there at least one more time before we see a bottom. Moving over to my accounts, honestly, this was a terrible result. Markets were up quite a bit, finished up 1%, should have made money, certainly didn't, down about $300, nothing crazy, it's like 0.2%, but when markets are up 1% and I'm down 0.3, that is not a great result for sure. Markets are rallying a little bit in the after hours. After being down quite a bit, you can see we're seeing a slight bounce back towards almost the closing price. I am very small bearish here. I have a 439 and a 440 for tomorrow for $4 credit. And then further out, I have a 447 for 2 days from now. I can turn that into a covered call if I need to, depending on how aggressive we see the rallies from this after hours into the pre-market tomorrow. I don't think that that's going to happen. Obviously, my overall thesis is that we're going to see a continuation lower with a double bottom or a slightly higher low at a minimum. So that means we're probably headed lower at least a little bit in the short term, which is why I do have that slight bearish thesis here. And that is supported with that 447 call for $2 for 2 days from now and a 450 for 10 days from now for $5 each. So plenty of protection to the downside as we wait for markets to bottom. And then for the IWM, I didn't change that position at all. Still a 201 for tomorrow for a $4 credit, slight profit there. 205.19 is max profit, which gives me plenty of protection if markets fall, but also should collect that $4 credit as protection. So either way, should be in good shape on the Russell. Let me know down in the comment section what you think of markets and what they are going to do tomorrow. Have we managed to find a short-term bottom, or will we have to go down and double tap that low from Monday pre-market? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.